Donald Trump, self-made billionaire or master brand marketer? This question divides boardrooms, dinner tables, and political debates alike. For decades, Trump has cultivated an image of unparalleled success, rising from the Manhattan skyline to the global stage. But how much of that image is built on hard assets, and how much is perception? In this video, we'll peel back the layers of Trump's financial empire to uncover the truth behind his wealth. From the head start provided by his father, to the gambles that defined his career, and the controversies that followed, we'll reveal how Trump's net worth was built, and whether it's as substantial as he claims. The foundations of Trump's wealth. Every financial empire has a starting point, and for Donald Trump, that foundation was laid by his father, Fred Trump. A real estate developer in the mid-20th century, Fred Trump amassed his fortune building middle-income housing in Queens and Brooklyn. Leveraging government subsidies and tax breaks, Fred created a highly profitable model that provided his family with financial stability and a playbook for success. When Donald took the reins, he inherited not just millions in capital, but also the knowledge and connections to navigate complex financial systems. One of his first major successes came with the Grand Hyatt project in the late 1970s. Partnering with Hyatt Hotels, Trump transformed a dilapidated building near Grand Central Terminal into a luxury property. This bold project not only turned a profit, but also established Trump as a player on the Manhattan real estate scene. His next iconic move was Trump Tower, a 58-story skyscraper on Fifth Avenue that opened in the 1980s. The tower wasn't just a building, it was a symbol of wealth, power, and opulence. However, behind its gleaming facade lay Trump's financial strategy, heavy reliance on loans. While borrowing allowed him to undertake ambitious projects, it also magnified his risks. This pattern of leveraging assets for rapid growth would define his career. The rise of an empire and the cracks beneath. By the late 1980s, Trump's empire had grown to include lavish casinos in Atlantic City. These properties embodied Trump's flair for spectacle, but they were also financial ticking time bombs. He relied heavily on loans and high-interest bonds to fund the casinos. When the market shifted, the casinos suffered multiple bankruptcies, forcing Trump to restructure his debts to retain control. Rather than retreat, Trump adapted. He pivoted from ownership to branding, transforming the Trump name into a marketable asset. Licensing deals allowed him to profit from properties, products, and ventures without taking on ownership risks. From hotels to vodka to even mattresses, the Trump brand appeared on a wide range of offerings. Some, like the Trump International Hotel in Las Vegas, were successful. Others, like Trump Steaks, were infamous flops. Licensing, a mixed bag in the early 2000s, Trump transformed his name into a global commodity, turning branding into a lucrative art form. His signature became a marketable asset that adorned luxury properties from the gleaming towers of Dubai to the skylines of Istanbul and the developing landscapes of the Philippines. This licensing strategy was ingenious in its simplicity, earned millions without the traditional risks of direct real estate investment, effectively creating a financial buffer against market volatility. Yet, this strategy was a double-edged sword. The Trump brand's value was intrinsically tied to public perception, a delicate ecosystem susceptible to reputational shifts. The Trump University scandal epitomized these vulnerabilities. When multiple lawsuits culminated in a $25 million settlement in 2016, the legal fallout threatened to erode the very brand he had meticulously constructed. However, in a testament to the resilience of his personal marketing prowess, Trump's commercial appeal remained surprisingly robust, continuing to generate significant revenue even amid widespread criticism. Mar-a-Lago and Trump's Marquis properties. One of Trump's most iconic assets is Mar-a-Lago, his private club and residence in Palm Beach, Florida. Purchased in 1985 for $10 million, the sprawling 20-acre estate is now valued between $300 million and $600 million, depending on market conditions. Beyond its real estate value, Mar-a-Lago is a cash-generating powerhouse. Trump's portfolio extends beyond Mar-a-Lago. Properties like the Trump International Hotel and Tower in Chicago and Trump National Golf Club in Bedminster solidify his presence in luxury real estate. However, many of these properties are leveraged, meaning their true value is offset by substantial debt. Tax strategies and controversies. One of the most debated aspects of Trump's wealth is his tax strategy. In 1995, Trump declared over $900 million in losses, enabling him to offset taxable income for years. While legal, this strategy sparked national debates about fairness and transparency in the tax system. In recent years, investigative reports revealed that Trump paid relatively little in federal income taxes, relying on deductions, write-offs, and real estate depreciation. Critics argued these revelations exposed vulnerabilities in his financial empire, while supporters praised his savvy use of the tax code. This duality, admiration versus skepticism, has come to define Trump's financial narrative. The Apprentice, a new persona is born. In 2004, Trump transitioned from real estate mogul to reality TV star with The Apprentice. The show was more than entertainment, it was a marketing platform. Each week, millions tuned in to see Trump preside over the fictional boardroom, delivering his iconic "You're fired" line. Financially, The Apprentice was a windfall, with Trump reportedly earning over $200 million across 14 seasons. More importantly, the show reinforced his image as a shrewd businessman, opening doors to new licensing opportunities and demonstrating his popularity. Truth Social, the new frontier. In recent years, Trump entered the digital space with Truth Social, a platform launched under the Trump Media and Technology Group, TMTG. Trump owns approximately 59% of TMTG, making it a cornerstone of his portfolio. As of late 2024, TMTG shares were trading at $31.60 per share. With an estimated 200 million outstanding shares, Trump's stake is valued at an impressive $3,728 million. Truth Social was positioned as a free speech platform for Trump supporters and a competitor to Twitter. While its long-term success remains uncertain, its current valuation showcases Trump's ability to adapt and innovate in new industries. Dissecting Trump's net worth. Trump's net worth has always been a point of contention. He claims it exceeds $10 billion, while analysts like Forbes estimate it at closer to $2.5 billion, focusing on tangible assets and conservative valuations. However, Truth Social complicates these calculations. With Trump's stake valued at approximately $3,728 million, it alone challenges the more conservative estimates. When combined with high-value properties like Mar-a-Lago and revenue from licensing, his financial empire may be larger than critics admit. Yet, his reliance on debt and the volatility of his brand leave room for skepticism. Legacy, wealth, or illusion? Donald Trump's financial journey is one of ambition, reinvention, and resilience. From inheriting millions to mastering branding and now venturing into digital media, Trump has repeatedly demonstrated an uncanny ability to capitalize on opportunities. Yet his legacy is a paradox. While critics argue his wealth is exaggerated, the numbers tell a nuanced story. Whether he is a billionaire mogul, a branding genius, or both, one thing is clear. Trump's financial empire is as polarizing and enigmatic as the man himself. If you found this video insightful, please consider subscribing. We share content like this every week. Also, don't forget to check out our most recent video on the wealthiest owner in sports, Steve Ballmer, for an in-depth look at his incredible fortune.